What's up, folks? Trail here, better known as Budget Bill, and today we are going to be discussing why you should not escrow your home taxes and insurance. And since this channel is all about finance, we are going to touch on all related areas. This particular topic I have shared with so many friends, so I figured I would share it with my new family, you guys, my new YouTube family. But nevertheless, let's go ahead and jump right into the video. What's up, folks, and thanks for sticking around. So I have a question for my audience. Now, don't everyone speak all at once, but do you escrow your home property taxes and insurance into your monthly payment? Now, since 2005, when I purchased my first home, I knew nothing about owning a property. I didn't know much about buying a home, paying for taxes, paying property taxes, or anything. The one thing I did know was that I needed to save up a lot of money and make sure my credit score was A+. So I ended up living at home with my parents until I was like 27 years old, and I ended up saving up a substantial amount of money and built my credit score to over 700. By doing this, I knew that I would have the best chance to buy my first home. Now, because I knew nothing about the process, I ended up reaching out to one of my friends that he was pretty wealthy, he was pretty smart and savvy, and he was definitely good with his money. So I ended up asking him to be my mentor throughout this whole process of buying a home. Now, one part of the buying process is that he taught me was to not escrow on my home purchase. Now, the thing I like about his teaching is that he gave me all the options and the benefits so I could make up my own decision based on the facts. And that's what we want to talk about today. So if you are new to mortgages or you plan on buying a home soon, this is what I'm talking about. Your monthly mortgage payment typically includes the principal plus the amortization or the interest of the loan itself. Now, the mortgage company usually gives you an option of paying a few $100s extra per month, so your escrow account will have well more than enough money to cover your annual property taxes as well as your annual homeowner's insurance. And then sometimes you might have an HOA included in that. Now, this is done for two reasons. Number one is to guarantee your property taxes is paid so the city doesn't have to take a lien against your home. And then for the second reason, which is probably to make money on your escrow account. Now, I'm personally not a lender nor a mortgage company, so I don't have any hard evidence of what they really do with your money in that escrow account. However, I have a hard time believing that money is sitting for all Americans in the world in a checking account earning zero interest. I just find that hard to believe because banks are smart. They are very smart. So I seriously doubt that. But my speculation is they are definitely earning interest while lending out a percentage of your money of your total escrow account. And what I mean by lending your money out is that that's what banks do. They have your money that's sitting in your checking account or your savings account or your escrow account potentially, and they lend it or loan it out to others so that they can make interest money on your money. So the question is, why don't you keep your money yourself and earn interest on that money? Then you can end up paying the bill at the end of the year yourself. You have to pay all your other bills, don't you? So why are we depending upon a bank to pay off your property taxes and your homeowner's insurance? Just do it yourself. Now be very, very careful, because if you don't properly save that money, including a little bit of extra cushion to pay the bill when it's due, they could issue a lien against your home and you could end up losing it. So you definitely don't want that to happen. But that's also the case if you don't pay your mortgage as well, right? They could put a lien on it too. So either way it goes, if you don't pay, they could issue a lien on your house and you could potentially end up losing it. So for context, I live in a very high property tax rate county where taxes for homes in my area are typically assessed between $10,000 up to $25,000 per year. So you do the math on the opportunity cost you could be making on that money before it's transferred to the tax man. So for example, let's say for simplicity, your property taxes is around $15,000 a year. Now let's divide $15,000 a year divided by 12 months, which is around $1,250 per month that you need to put into your escrow account to cover for your property taxes. And for that type of home, your homeowner's insurance is probably going to run you around $3,000 per year. Now that's a total of $18,000 per year that's going into your escrow account over the 12 months. And perhaps your finance bank is potentially making interest on your money. My thoughts are related to opportunity cost. How much can you make if you held on to that money until the end of the year? Or what other type of benefits can you receive by holding on to that money? Now, if you are not responsible with your money and you don't trust yourself to be a holder of such a large amount of money until the end of the year, or if you're the type of person that gets that burning sensation in your pockets whenever you come across some money, then by all means continue to use the escrow account method and have someone else hold on to the money for you, because this option is probably not best. But for those of you who are good at managing money, good at saving, good at using your money as a vehicle to gain more new money, then this might be for you. Now, typically, if you choose not to escrow your account, you have a couple of ways to do this on your own. Number one, you can potentially write a check at the end of the year. Do people still have checks these days? I might be old school, but I still own checks. I'm not sure if millennials don't even know what a check is. Number two, then you can also pay a lump sum at the end of the year using a credit card. Now this falls right in line with getting new credit cards and helping you meet the spending requirements. Hell, you could potentially get 2 or 3 new credit cards and easily meet the spending requirements and pretty much get free stuff. And obviously that's depending on how much your property taxes and your homeowner's insurance is for the year. Now you might be wondering, how is this going to benefit me, Budget Bill? Well, I'm glad you asked. One of my favorite ways is using a high interest savings account. There are several savings accounts that offer you up to 17 times more interest on your money than your typical local bank or your big banks, such as Chase, Bank of America, or Wells Fargo. So most of the options out there are FDI insured, and they pay in a range between 1.2% up to 2.05%. And yes, that is free money. You thought I wasn't going to say it, didn't you? Didn't you? Now you have these online banks such as Wealthfront, E-Trade, Citibank, Ally Bank, PNC Bank, SoFi Bank, and even Robinhood. Those are just to name a few of the companies that offer you high interest savings accounts on the money that you deposit into your account with them. And yes, it is free money. Now, it doesn't matter which one you choose to invest in. However, I would recommend you invest in one that offers you at a minimum of 1.7% interest APR on your money. So using our example earlier, which was $18,000 for your escrow account, if that money was in a high interest savings account, you could potentially earn up to $30 in free money every month. And this amount is compounded each month. Now, come on, Budget Bill, let's be realistic. On the first month, you're not going to have $18,000 sitting in your high interest savings account because it's the first month. You're just now getting started. However, you will start accruing interest on day one for each month. And don't forget, this is free money. And then as you get closer and closer to the end of the year, you will be at your full escrow amount and ready to pay off the tax man. After that, it's time to rinse and repeat. Nothing more than free money. Now, these type of accounts are good holding tanks for your money instead of under your mattress or in your shoebox. And it offers a great way to have your money working for you. So if you have any other large sums of money lying around, this is definitely a great option that has low risk that you should consider. I've definitely considered it for myself, and I've moved some money around from my big banks to a couple of these options that I've already listed earlier in the video. Well, that's it, folks. I hope I have earned a thumbs up from you. If it's your first time on the channel, consider subscribing as we discuss all types of finance, credit cards, as well as real estate. And if you found value in this video, go ahead and give us a like, as it definitely helps out with the YouTube algorithm. Other than that, I appreciate you watching, and I will see you on the next video. Peace.